Wages have risen for millions of workers in the UK, according to official figures from the Office of National Statistics.
It's the highest growth rate on record, but it's not great news for mortgage borrowers. It puts even more pressure on the Bank of England to raise interest rates again as it meets next month.
So Liam Halligan is in the studio for us. It feels like the economy gives with one hand and takes with the other at the moment, doesn't it?
Ordinarily, we'd be celebrating the fact that wage growth is so high. It's still lower than inflation, by the way, but that doesn't mean that the Bank of England isn't worried about it. Let's just have a quick look at the numbers. So public sector pay, it's a bit weird. It's done in quarters. Yeah, here comes the graphic. Andrew, I know you love a graphic.
Love me graphics.
So public sector pay between March, April and May compared to March, April and May in 2022 was up 7.7%. That's the 4/5 of us who work in the private sector, so in commercial companies. That's the fastest increase in private sector pay that we've got on record.
Gosh.
Public sector pay was up by slightly less, 5.8%, and that's the fastest increase for the 5th of us who work in the public sector since 2001. Now, you'll both notice that those numbers are less than 8.7%, and 8.7% is, of course, the current rate of inflation. So wages are still falling, as we say, in real terms, but they are still adding to the costs of companies, and those companies are passing those costs on, so they are still inflationary. And that's why I'm afraid I've been arguing against it for many months, but when the MPC, the Monetary Policy Committee, meets again in August, we're probably going to see an increase in the base rate, the interest rate, from 5%, possibly to 5.5%.
Why do they do it drip, drip?
I think when they first came round to the reality that many of us had warned about in late 2021, that inflation was coming, they went off with little quarter-point increases. Right. It was very slow and very cautious. The US Federal Reserve, in contrast, went whack, whack, big interest rate rises from a low level, saying we are really serious about getting our arms around this. The Bank of England, in general, has relied on smaller interest rate increases, and that's why now it's playing catch-up. That's one reason why we have the highest inflation.
I was going to say, US inflation is half of ours, isn't it?
US inflation is 4%, ours is 8.7%. That's partly because the US has had the shale revolution. Their energy costs are much, much lower than ours for their companies, and indeed when they fill up their cars and vans with petrol and diesel, because taxation is so much less in the US on road fuel.
This interest rate... gosh, I can't believe we're saying it again, but this potential interest rate rise, Liam, is this going to be... How is this going to affect the housing market? We saw yesterday, actually, about the prices of the houses now starting to come down. What
we're seeing now are the prices of houses come down, not as reported by the mortgage companies, because they've been reporting lower house prices for a while, but even by the estate agents, because estate agents tend to report asking prices rather than completed prices, and asking prices are now coming down quite steeply. Why? Because people can't afford to bid higher prices because they can't borrow the money that underpins that bid, because so many hundreds of thousands of households are coming off these low fixed 2- and 5-year deals. Fixed interest rates prior to December 2021 were 0.1% at the Bank of England, which meant they were like 1%, 1.5% if you were getting a 2- or a 5-year fix. Well, between now and the next general election, when we think is going to be in October next year, 2 million households are going to come off those ultra-low deals, be fully exposed to market interest rates for a mortgage, 6%, 6.5%, 7%. Think of the proportionate increase, paying a mortgage at 1.5% to 2% and then 6 or 7%, upending the family finances of millions of households.
Some people, older people, and I count myself as one of those, and you'll remember it, Liam, in the 90s when...
You almost called me old, though.
Yeah. Just before Black Wednesday, when interest rates were incredibly high, double figures, 14, 15%.
They were.
But we were paying interest on a much smaller loan.
That's right.
Because house prices were so low then.
I get this a lot in my emails, on Twitter. People stop me in the street and they say, look, today's kids, they don't realise how lucky they are. We were paying interest rates of 18, 20%, which you would if the base rate was 15%, right? But the difference is, back then, it's not because kids today are eating too many avocado sandwiches and flying to Ibiza. Well, but they are also paying, instead of 4 times the average wage for a home, they're paying 10 times the average wage for a home. So
they don't save, though.
There's so much more...
There's a whole generation
so much more indebted than they are. I think young people have always spent their money, and some of them have saved.
Not right now.
I think a lot of young people have given up trying to buy a house.
This is true.
Because it keeps getting away from them. And if they haven't got the bank of mum and dad, you know, a third of all first-time buyers now use the bank of mum and dad. It's over half in London and the South East. That's just unfair.
Yeah, it is.
But the fact that house prices are coming down now, Liam, we always think, oh, terrible, our house prices are going down. But that will be better for some young people who might now be able to get a foot on the ladder.
Well, maybe prices are coming down, but they've got to pay much more for the money that they
So it's on the one hand, on the other.
So the effective ability of young people to buy houses isn't getting easier just because house prices are coming down a bit because they're having to pay so much more to borrow the money. Yeah, what today's housing market is great if you're one of the very, very privileged few people who've got a lot of money lying around. This is going to be great for cash buyers, right? Because a lot of people are going to be selling their homes, what we call under distressed circumstances. They need to sell because they can't afford the payments, and buyers will sniff that out and they'll offer them cash for less than the seller wanted to actually get.
Talking of which, 10 seconds on why Don't Kill Cash is the greatest campaign in the history of media broadcasting.
Yeah, we're doing really well. I tip my hat to the digital team here at GB News, Dan Falvey, Jeff Marsh, all the team. They've done brilliantly. I think we've really alighted on something here. We've got cross-party support for this campaign. I know certain quarters there are concerns being raised about it, but what are we trying to do here at GB News? We are trying to maintain a status quo for vulnerable people, for the 1-2 million people in this country without bank accounts, for the 10% of people who haven't got access to the internet. They need cash.
They do.
We can't take cash away, particularly from vulnerable people across the UK, and that's why we say don't kill cash. gbnews.com/cash. 200,000 signatures.
Amazing, isn't it?
Let's make it 250. Let's get to 250,000. We may not get to 250,000 in this show. Maybe I should aim a little lower, but maybe